You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the RockLobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rocking tune means it's time once again to rock out with us here on the old option block, the program where we break down all the rocking and rolling out there in the options markets. Indeed, it has been rocking and rolling. Some things to talk about of late, which is always nice to break up some of the quiet and the narrative of how low can VIX go. Got a little bit of something else to talk about this week, which is always fun. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever exciting, ever fun, ever interesting Options Insider Radio Network. Quite a few programs, about 15 for you guys to sink your teeth into, including quite a few hitting the network right now. Our interview program, Vol Views, a bunch of others from the Options Industry Conference last week, as well as all the panels. So if you guys couldn't make it all the way down to Scottsdale like I did, I schlepped all the way down to the hot Arizona sun just to get all that great audio for you guys. You guys saved thousands of dollars on the conference registration, on the plane tickets, on the travel. Don't have to do any of that. Just sit back, kick back in your car or at home or your computer, however you listen to the shows, and listen to all that great audio hitting the network right now from the Options Industry Conference. The panels out there. Some of you have asked for Henry's slides. I'll see if I can get those for you because that goes along well with his presentation. Great stuff. Just sit back and relax and enjoy it. And I don't know what you're going to do with all the thousands of dollars. Send us a nice present. There we go. Nice trade-off there as you enjoy all that great audio completely for free. And again, you can always join us on this program live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. So you too can get all the goodness live as soon as it's made right out there to your ear holes. No waiting for the podcast to hit the next day. And of course, if you want the podcast version, iTunes, TuneIn, Stitcher, however you get that, including via our mobile app, iOS, Android, and the beloved Fire OS. So play around with that, use it, all the contact info baked in there. Because we may joke, but we do love to hear from you guys at the end of the show. At the end of the day, it's not really the same if you guys aren't hitting us up. And hitting us up you are. We'll get to some of your questions in a little bit. But first, let me introduce the rest of my cohorts, my partners in crime on the old program today. Let's start off. Let's go to St. Charles. Why not? It's the first one on my screen, so he's the first guy on the program. Good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, are you there, sir? Are the Skype gods smiling upon you today?
MIKE to the T. I am here. It is Thursday. It's a beautiful day in sunny, scenic St. Charles, and we got a lot to talk about today. This is going to be a good show. I can just feel it.
Uncle Mike's already got an intro for himself. I agree. This is going to be a good show. New intros for Uncle Mike, the whole 9 yards. Let's see what the RockLobster's got up his sleeve as we are joined in the hinterlands of Maine by the RockLobster himself, Mr. Andrew G., a.k.a. Andrew Giovinazzi from OptionPit.com. What kind of intro do you have for yourself, sir?
I don't have anything. We have some sun and warmth, so I'm saying it's sunny and warm in Maine today. How nice.
There you go. You can join the sunny and warm party. You guys over there, usually foggy, kind of damp, a little rainy, sometimes cold and snowy in the winter. This time, you get to join the sunny and warm party. It's about 80 degrees around the old Options Insider Studios here in in Chicago. I won't ask what it is in St. Charles because you know it's always a balmy 72 out there. Instead, we'll just keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. Like the man said, this is the portion of the show where we break down what was moving, shaking, rocking, and rolling this week from an options action, unusual activity, market index movement, all that fun stuff here on the old program today. And we are ending the day here with most of the major indices squarely in the green, up about 0.6% on the S&P, 0.5% on the Dow, and the leader of the charge today is the old NASDAQ, up about a full percentage point. That means VIX taking it on the chin a little bit today. VIX cash off about a 1.2 points after yesterday, which was just a epic rally. Figured I was off at yet another conference yesterday, so I missed most of that sell-off. I was out of the trading show, which is here in Chicago yesterday and today. So everyone was there talking about the crazy sell-off in the market yesterday, of course, on the heels of this special counsel, prosecutor, investigator, call them what you will, being appointed over there for Mr. Trump. We saw VIX gapping up. I believe it was one of the biggest up days in VIX history. If you're talking percent of a percent, I think there was some controversy over that point. I saw our friend Mr. Rhodes over there debating back and forth with some people on Twitter exactly where that ranked. I'll see if I can pull up his number, but I believe it was in the top 5 at the end of the day. Again, percent of a percent, so cover your ears, Mr. Here we are today. So August 21st, 2015, and then May 17th actually was the number 7 overall spike in VIX, with about 46% change out there. So if you're wondering how that stacks up for the top of all time, number 7 on the top 10 list. Number 1, February 27th of 2007, 64% change in the VIX that day. All right, since we're talking VIX, let's start with the RockLobster out there. Obviously, things probably been rocking and rolling in your neck of the woods the last day or so. A lot of people are probably hitting the old pit chat saying, what's up with this VIX? Why is it so crazy? So tell us, sir, why is it so crazy?
Why is the VIX so crazy? The market moved. Where's Schlesinger when we need him? That's what we need. We need the guy to say, there's realized vol. But, we had almost a 2-point move yesterday. So that's 32% volatility, and VIX only squeaked out 14.5, a 15.5 or 16 price. So I actually think, considering, I guess, how low vol was before, they certainly didn't, the cash came up, vol came up definitely because the market moved, 2%. It moved only 0.5% today, or less than 0.5%. I think at one point it was up a little bit more. But, a little bit of volatility came back, and the volatility came back because all of a sudden it was the markets, everybody's been sort of blowing off the news, and all of a sudden they're not blowing off the news. And I guess that was the big difference. As more of, I'm just calling them news bombs. It seems like they all kind of have this flavor of somebody that's an associate of somebody who can't say something is going to drop a news bomb about something, about the investigation, about Trump, and it gets moved around, and then everybody gets excited about it. And today it looks like we bounced back a little bit from that. We want to see if there's going to be more of the same, or do the news bombs die down and Mueller gets to the bottom of this, and, what is it going to take? A year, 2 years, 3 years, 2 months? I don't know. Tell you what, if you want some volatility, look at Brazil. Look what happened. It's when they have corruption there with their new president. Their major market index was down 15% today. That's, Brazil is not a small country. To have your index close down 16% in a day, that would be, let's see, that would be 200 points in the SPX. Actually 300 points in the SPX. So we'd be back to 2000 in a jiffy. So it can happen. But I think the fact that we had, and Brazil did that, and actually VIX cash was down today and the market was sort of muted. They're still waiting, I guess, for more of these news bombs. Tomorrow could be another one. And we'll just wait and see. But when the market moves, VIX goes up because no liquidity provider in the world is going to sell volatility at 6% when the underlying is moving, 3 times that or 4 times that. It's just not going to happen. So,
what fun is basic math, sir, when you're talking about things like VIX?
Yeah, I know. It doesn't sound as good on CNBC, but nonetheless, that's what it is. It's just a whole lot of math.
I've said it many times. The vol market is very schizophrenic. They got to have it. They got to have it. They cannot touch it. Yesterday was a gotta have it day. Today, leaning towards the more they don't want it anymore type. But yeah, we joked about many times, and we've said many times sometimes on this program, sometimes it seems all the macro factors out there that VIX should probably be a little bit higher, just because given all the unknowns that were lurking out there like this special counsel. But then again, at the end of the day, it is hard to argue against the basic math at the end of the day. Realize vol is 5 or 6%, then even a VIX cash as seemingly cheap as a 9 or 10 still has a decent amount of premium in there. We're just arguing about this and debating it on our advisors option program, actually with your buddy Matt Amberson there, Mr. RockLobster. So stay tuned for that on the network, listeners. But there was a lot. I have to wonder too. I'll look into this. This has to be a record for a new president. 4 months in to already have a special counsel appointed to investigate him. I can't imagine any other president has challenged that record. Certainly a dubious honor, nonetheless. We'll get away from the political realm. Uncle Mike will turn to you in the quaint, tranquil waters of St. Charles, where politics are just a distant rumble across the countryside there. What was catching your eye in yesterday and indeed today's market activity, sir?
So it's now a bad time to talk about politics then?
Uh-oh, I set you up for failure.
Oh, that's okay. I think yesterday, like Andrew said, this was the market is paying attention to the news now all of a sudden. And there's a lot of fear out there. But let's kind of add to that. Let's look a little bit deeper with that. If you look at the market over the last couple of days, we actually barely touched through the all-time high on the S&P on the 16th, which is Tuesday. So it looked like, because I'm just looking at SPY here. Now, granted, this doesn't factor in dividends, but it is kind of a key level in a lot of ways. The previous all-time high was on March 1st. That was the day after the president gave his State of the Union address, and everyone was really excited about it, and the market gapped up a lot. And then we've kind of just channeled a little bit for the most part for March, April, and now half of May. And then we made another run at the all-time high on Tuesday. So when that happens, it's one where it takes some gumption to get through an all-time high. And oftentimes, I've even heard people say there's never been a better time to sell than right now, whenever there's an all-time high in the marketplace. So you have that adding to the mix, and whether or not this is big news or not, you can argue maybe the media is sensationalizing the Comey thing a little bit, or maybe this is something really scary. Who knows? That remains to be seen. And by scary, I mean something that could really do something crazy to the marketplace. Who knows? But I think the other thing that we need to make sure that we don't overlook is that even though we had a pretty big move yesterday, 43 points in the S&P, it was close to 2%, I believe. And today we had what appears to be not really much of an answer from the bulls on that. We have I think S&P is up 8 on the day. So we have some bearish activity going on right now. But once again, we need to have an understanding that we are roughly 30 points away, 1.5% away from an all-time high in the S&P 500. And so with that, there's a lot to be said for that. Let's not get too crazy on this, thinking that this is the end. We need to sell everything in every holding with which we have. Some other things of note, silver. We actually had a big drop in silver today, but it has been rallying the last few days. That's one that has actually kind of benefited over the course of these last few days. And by the way, just for those of you that are listening on Mixler, make sure you stick around for the strategy block, because I do have a very minor adjustment to announce on my silver trade. Not a big one, but just a minor one. But just the fact that I have an adjustment that I have made at all on that one is very exciting in that realm. But we have that, and then combine the fact as well that the VIX kind of went through the roof yesterday. So even though the roof was really low to begin with. But with this, we have a lot going on, and I think over the course of the next week or two, we'll have a lot to be seen. And this is going to be not to get ahead of ourselves and be in around the block section too soon, but I think over the course of the next week, there's going to be a lot of very interesting events to watch in this marketplace.
I love it when we're teasing minor adjustments to silver straddles. That's where we are in the silver realm. But a lot of other things lighting it up today, listeners. It is still earnings season. Some of this having gotten lost in the noise, the Sturm und Drang of all this crazy macro stuff going on. But there are some actual numbers coming out after the bell. A lot of you guys like to watch our old friend Baba. They came out before the bell today. They were pricing in. They closed right around 120, about 75 or so last night. They were pricing in about $6, so right around 5% or so. And today they had a pretty wild day. They dripped down as low as about 114, actually 114 even was the low on the day. So interesting there. So at about 675, they dropped off. So over the straddle range on the downside before rallying all the way back up and then some, getting as high today as about 122.63. So an impressive range out there, about $8 and change out there. So they were pricing in $6, but you had a lot of range in both the downside and indeed back on the upside to scalp some gamma if you were indeed long, and if you were short premium, if you could keep the bit in your teeth for a little bit and not pull the trigger on that immediate downside move, you had a chance maybe to come back and not close for probably a winner, but much less painful than it would have been. Baba was lighting it up today as well. They've been averaging about 95,000 contracts a day. Today doing about 420,000, so over 4x. About 300,000 on the calls, about 120,000 on the puts. So big activity out there in Baba today. Were you playing in Baba? Let us know. Let us know how it worked out for you. Also, another big name reporting before the bell. Good old Walmart, another bellwether for the economy, of course, ticker symbol WMT. They closed yesterday right about $75 or so. They were priced in about 2.25, so right around 3% for their straddle. And they had a nice run as well. They hit as high as about 77.66 or so. So right about a little over $2 there, about 260 over there on the straddle as well. So outperforming on the straddle side as well. They got as low again. They closed at about 77.50 or so. So a nice little boost here for Walmart. Clearly all this retail malaise not hitting them like it's hitting all the other retailers out there. Speaking of retailers, there is another one actually popping off after the bell as we speak. Let's see if we can pull it up. This is, of course, Gap, ticker symbol GPS. This one was pricing in. It closed right around 23. Well, actually, let's see where it closed. It was trading around 23. Yeah, 23.12 is where it closed today. Actually, 23.19, so a little bit higher than where it was pricing up earlier today. They were pricing in right around $1.85, so somewhere in the neighborhood of 8%. And this is the name that does about 10,000 contracts a day, doing a pretty aggressive 63,000 to wrap up the day here today. And let's see if we have some after-hours movement so far in the after-hours. They are up about 24.10, so up about 90 cents. About 4% in the after hours. So far, they're about halfway there. We'll see if Gap can keep this upside love going. Retailers not known for all this upside love of late, so maybe Walmart and Gap going to buck the trend we've seen out there of retailers. Pretty much, people have been calling 2017 the death of retail. Maybe Walmart and Gap perhaps bucking that trend. Mr. RockLobster, either of these names lighting it up in the pit chat today? I'm sure you got some Baba heads over there, all the crazies in your pit chat.
Actually, we have one client that had probably the Baba trade of the century. He kind of a ratio strangle where he sold the at the money stuff and he bought some tails on a, but he bought more. He based the ratio was probably, I don't know. He bought 5 and sold 2, bought 5 strangles, sold 2 straddles. He got not only he got the downside move at the beginning, so he got to dump some extra puts, but then he got the total pin for his strangle. So it was quite a fine move. So Baba was discussed a little bit, mostly just in the context of that awesome trade. After that, though, we haven't not much else. It seems like things that Amazon can't do, those retailers do well, and things that Amazon does, those retailers, are choking and dying. So I don't think that's kind of that seems to be the chat room opinion of retailers of late.
Speaking of opinions, it's time for us to give you our opinions on some crazy options trades because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block, the portion of the show where we navigate into those dark, turbulent, dangerous waters of the option space. We do it for you guys, so you guys don't have to. You're going to kick things off in a name that's been a frequent offender of late on the old Odd Block. This is Pandora Media Inc. Ticker symbol P. Of course, they of the single letter ticker symbols over there. Closing today, $9.42, up almost half a buck, so about 5.5% over there. So a good day for good old P. This name does about 28,000 contracts a day, doing quite a bit more than that, about 208,000 contracts today, about 5-to-1 calls over puts. That should give you some inkling of what caught our eye. And if we're talking about what was going up, you guys remember we've talked about some UA out here in Pandora in the past, and it looks like maybe we have someone perhaps giving up the ghost, getting the heck out of Dodge over here. The activity we saw was all the way out in Jan 2018, and it was the 15 calls that first caught our attention. We saw those going up for 33,192, so small size. And it's one block, too, so pretty impressive block over there. And our friends over there on the Philly doing it for 25 cents. Looks like a size sale on those. It looks like a lot of funky paper went up out here. We started noticing on the 15s, but then we saw paper on the 12s. It's got a bit of a ratio spread, 16,000 on the 12s versus about 35,000 on the 15s. There's size open interest on both of those strikes. We also saw put open interest going up, about 9,000 of the 10, actually put volume going up, 9,000 of the 10 puts, 15,000 of the 8 puts. Both of those have size open interest as well. So Mr. RockLobster, you had a chance to watch this one a lot today, but it seems like this is someone maybe giving up the ghost. They were using some puts to finance some long call spreads out here in Pandora. Seems like maybe they're deciding discretion the better part of valor. You agreeing with that one, sir?
Yeah, I am. I mean, almost everywhere in the term structure, which means the individual months of all the options, the vol was up in there except for January. So the only thing I can think of is that they are getting rid of it. So I want to look at the open interest tomorrow. But it looks like they were trying to dump their 12s that they were long and buy the 15s to close, and then dump some of the puts that they were short, or actually close some of the puts. So, but they ended up with that's enough to give, I guess, liquidity providers some gamma, so the vol went down. That's how it appeared. And I'm not quite, it seems kind of bottomish. The open interest was higher on these strikes the last couple of weeks. So it just feels like somebody had this idea, and then once Pandora hit their short strike, they're bailing. So I just have to make sure. The only thing that could be, unless if it's an opposite, if they're starting to buy stock against this position, which, let's see, I did not see stock and options. There was a stock and option trade, but it's only 48,000 shares. So that's nothing compared to, I don't know how many contracts that went up here. I mean, this is more like, 75,000 contracts. So 48,000 shares is kind of a drop in the bucket.
Yeah, certainly not delta neutral for anything along those lines. I was looking here at the year that's been out here in Pandora. It's been a bit of a turbulent one. We're kind of at the low end of that range, right around that $9 and change level right now. It got as high late last year, right around September, October, into the 14, nearly 15 buck range. So it's had a nice range, about 9 and change on the downside, all the way up to 15 bucks again. On the low end of that range, interesting time for our friend to get the heck out of Dodge, but if that is indeed the case, and this is all paper going up on only strikes that have a lot of open interest on them, so it does have the hint of closing, but unfortunately, due to our legacy systems here. We can't check the OI till tomorrow, so we'll know for sure then. Meanwhile, if you have some questions about this or you have some ideas what the heck's going up, hit us up. Meanwhile, let's move on to our next name. Another one we talked about a little bit here on the show of late. This is SBA Communications Corp. Easy for me to say. Ticker symbol SBAC. It's not the Small Business Advocacy Council. Nope. This is SBA Communications Corp. Closing today, $132 even, down about $2 or around 1.5%. This is a name that only does 900 contracts a day. Today doing a little bit more than that. Looks like about 2,400 on this one. Mr. RockLobster, since you have all the data in front of you, you've been watching this one. Why don't you walk us through what you saw up here? I believe we got some call spreads going up today.
Yeah, kind of out of the money ones, wouldn't you say?
A wee bit, yeah. 150, one double. That's those are interesting strike choices.
I was looking at the those went up yesterday into the close and just way out of the money and zero open interest. So I don't. You just see the open interest hanging out in September like that now and go, there was a little bit of follow-on volume today. Paper paying up to $1.60 for the SEP 150. So isn't that $20 out of the money? What's going on with this thing? I just have no idea why they're buying so much of it. No clue.
Yeah, the strikes are weird. Like I said, the closing today, 132 even. We're seeing, looks like size verticals, 150, 155. Some of this went up yesterday, so that's confusing to you listeners. We don't have the same paper today. About 5,900 going up yesterday, and only about 2,300 contracts going up total today. So someone maybe getting a little bit out of dodge here in this name. Yeah, the strike choices across the board. There is a total of about 13,000 still open on both those strikes. So clearly perhaps some open in paper out here yesterday, which is interesting and perhaps head-scratching in and of itself. Looking back at the year that's been out here in good old SBAC. This is the name that's gotten as low, actually not about November of last year, December, at around about $96 or so. And on the upside, we're flirting with it right now, right around 136 and change. So we're on the upper end of that band of late, and someone perhaps decided that this is indeed, as it appears to be, open in paper, that 150 is where we're going to be by not that far away, September. So interesting stuff, perhaps a little bit aggressive on it as well. And let's move on to our final name. This is going to be another name we talked about a bit. It's been a little while since they popped up on our radar, but they are fairly frequent offenders. This is Kimberly Clark Corp. Ticker symbol KMB. Closing today, 126.72, off about 1% or about $1.25. This is a name that does about 3,200 contracts a day, doing today about 11,500. Pretty active paper, about 17-1 calls over puts. And if you want to know what's up in KMB today, just scroll on down to the October chain. You will find the lion's share of that activity. One mega block of a nice 10,000 contracts even going up over there of the OC 130s. Looks like paper buying for $3.80. So lifting a nice juicy offer there on those 130s. Doing it 10,000 times even. Again, one block of Philly. Looks like we got some stock going up against it. Nearly 400,000 contracts. So a bit of a delta neutral play on this one. No OI to speak of. So it looks like what it appears to be on the surface, pretty much straight up, buy some calls, sell some stock, and let the rocking and rolling commence out here in KMB. This is the name looking back over the past year or so. It's kind of been all over the place. Got as low as flirting with the 110 level, right around 111 and change, and as high back in, about summertime last year, June, July, of about 139 or so. So a nice 20-plus handle range out here in KMB. And our friend out here is deciding, you know what, maybe I think this vol is a little cheap. I'm going to buy some. And we're going to see this thing rock and roll. So he's got calls, he's got stock. He needs this thing to move. He doesn't need it to sit here. He needs it to rock and roll, upside, downside, doesn't really care. He needs some vol. He needs some big action, some big movement. And that's exactly what he's betting on, to the tune of 10,000 contracts and about 400,000 shares of stock. Looking at this chart, I guess I can't disagree with him out here, and that this thing has indeed been rocking and rolling of late. Looking at a 30-day vol out here, about nearly 16, about 15.8. And I don't have the 30-day realize. 60-day realize is about an 11. So it looks like about a 2-point spread between 30-day implied versus realized. So we're looking at about a 13 and change out there in realize. So interesting stuff. Mr. RockLobster, take us home on this epic delta neutral call journey here in Kimberly Clark.
Don't you find that Kimberly Clark is a strange delta neutral call purchase? It's not something that I would say screams volatility. 10-day vol is 9%, 60-day vol is 10%, and you're just going to jump right into that and go delta neutral. Isn't that don't you find that an odd delta neutral candidate?
Our friend here clearly thinks that this vol is too cheap. I mean, look at the one. I hear you on that, with those numbers on the face, but I look at the 1-year chart and it has moved. It has exhibited some movement. It's nearly a 30 handle range over the past year or so. So this thing can move when it wants to. And it looks like a few times, like in October and again in January, it's had big movements around earnings. So this thing can pack a wallop when it wants to. Right now, it's kind of sitting there quiet. So maybe that's when you want to put on a nice delta neutral, is when you think it's cheap and you think you're poised for another big move. So I'm going to take the other side of you. I'm going to argue for our friend. He's buying cheap vol.
Okay, that's fine. Funny, too, is Colgate is another one that's moved big. Because, they're kind of packaged goods, consumer non-cyclical stuff. So maybe there's something to buying these just cheapy vol and these sleepy massive stocks. Maybe there's something there.
There you go. Maybe that's your next pit report, next masterclass.
We have seen it happen.
Next masterclass is out there looking cheapy vol in good old. Let us know. Do you agree? Disagree? That vol too cheap? That vol too rich for your blood? Are you on the Andrew kind of stingy cheap side, saying I don't want to pay that much for that vol? Or are you like me, saying maybe looking at that chart, maybe it doesn't. The name itself doesn't scream at it, but if you look at the chart, maybe you think it might be poised to move a little bit. In which case, maybe this is a good deal. Let us know what you guys think. Meanwhile, it's time for Uncle Mike to teach us what he thinks, because it's Thursday. It means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the old strategery block, the Thursday segment where Uncle Mike polishes off his bubble pipe, puts on his smoking jacket, sits down by a nice roaring air conditioner, and proceeds to dispense some options, wit, and or wisdom. Uncle Mike, you teased us earlier in the show. You said you had some size crazy, epic collar adjustments to break down for us. So I've allocated about 25 minutes for you to do just that, sir. Have at it. The floor is yours. Amaze us, wow us, astound us.
I bought back a call. Strategy block over.
Well, there we go. We got about 24 minutes left. I guess I can fill.
Let me see here. Let me see a couple of ways with which I can add to that, pontificate, and kind of go through some other things with which we've been doing recently with the this thing where it just kind of shook my whole foundations of investment philosophies with the 10 VIX, and now we're back to, a lot higher in the VIX. So let me kind of go through a few things. But first, as promised, I actually did make an adjustment in the silver collar. So let's recap this. It all started way back in the month of January 2017. January 5th, to be exact. I actually had a bullish position on silver, or a bullish sentiment on silver, as I typically do. So I bought it. And for every 100 shares we bought them at approximately $15.72. Some people got in later at better prices. Some people got in later at worse prices, just kind of depending on when new clients came in or when the adjustments were made. But for the purpose of this one, or for this illustration or for this trade, we're going to say $15.72 is when we got into silver. Now, simultaneously, what we did was we took advantage of the reverse commodity skew that exists, meaning that oftentimes in the world of stocks, an out-of-the-money put will be priced higher than an out-of-the-money call. Reason being, there's more fear of the market screaming lower than there is of the market going much higher. So let's say XYZ stock is at 50, the 55 call and 45 put should, in theory, be the identical price if the market has a 50-50 chance of going higher or lower. But most times you'll find the 45 put is going to be priced higher than the 55 call because there's more fear of the market going down. Now, there could be other reasons for that, but we don't want to get into that too much for this segment. Now, in the commodity world, it's kind of the opposite. If something bad happens in the commodity world, meaning let's say that, what could we possibly think of? Let's say that the president fires the director of the FBI, and then there's rumors circulating that the president's involved with Russia and told the FBI director not to probe him, and he fires him. Then sometimes things go higher in the commodity world, like kind of like silver did recently. So because of that, the same skew that I described in the stock world is the opposite in the commodity world. A lot of times. Doesn't always work that way, but a lot of times it can. So because of that, calls are priced higher than puts. And in that, there's no inherent advantage, so to speak. It's available to everyone. But because of that, calls being priced higher than puts, a collar can be something to think about and can be very attractive, as this one was for me all the way back in January 5th. So I bought the silver at $15.72 a share. And so on there, let's say that we want to have some downside protection on it. I went 2 years out and bought the January 2019 12 put, and I bought it for 77 cents. So on there, we actually have $3.72 of potential risk on that, not including the cost of the put. Now, obviously, this is Andrew would never speak to me again if I ever did such a trade. So I had to figure out a way to get my juice for free. So what I did was I sold the covered call simultaneously. All these trades were done. This whole three-legged trade was all done in one fell swoop. But then when I'm just talking about them one trade at a time for purpose of illustration. So at that stage, we sold the 25 call for 78 cents. And the 78 cent credit we took in from the 25 call financed all of the put. Plus, we had, as if life couldn't possibly get any better, we got a 1 penny credit on the deal, which, by the way, would have paid for your commissions with 30 cents to spare if you traded through RCM, at least on the option side of it. Now, let me expand on this. Why did I like this trade so much, and why do I still like it that much? Well, we have $3.75 of downside. We have $3.72 of downside risk. However, to the upside, we actually have $9.28 of potential upside. Now, I like it when I have $9.28 of potential upside versus $3.72 of potential downside. And on top of that, I'm bullish on silver over the course of the next 2 years. So it's because of that this trade was so attractive to me. Now, back in January, I thought, I've never really done a lot with a 2-year option play, but just in the past, I've noticed silver has moved a lot, and I've done a lot with maybe 6 month to 1 year options, but I've never quite gone 2 years out. But with that being said, I figured I'd be doing many adjustments on it. But silver just went up, basically. And so there wasn't a lot of opportunities to do adjustments on. I looked and looked, and then what has happened over the course of the last 4.5 months is that volatility on those options, not necessarily on silver as a whole, or maybe it has, I don't know, I haven't really paid too much attention to silver as a whole, but I'm pretty sure it has. Volatility has come down on that. So now we're only 4 months later, and what we were able to do 6 days ago, we were actually able to close out the January 25 call for 40 cents. So what that did was, because of the fact that silver, even though it's kind of come up, it's come down, it's had some movement to it, it's really almost the identical spot where it was when we got into this trade. And so by doing that, it's not necessarily an underlying movement trade. It's one where the volatility on the options themselves has come down. Because I have a hard time believing that over the course of 4 months, 50% of the value of the option goes away based on time decay. It doesn't work that way, especially if the underlying staying the same. So based on that, I got out of that specific trade. And now what I'm waiting for basically is for silver to come up again and sell another covered call in some way, shape, or form to help finance the put again. But now I only have about 40 cents that I need to finance, which I could easily sell that call again right now even and be right back where I started. But I believe that silver is going to have a little bit of a run, and I think that there'll be other opportunities. On top of that, remember earlier how I was saying how as markets go higher in the commodity realm, volatility a lot of times goes higher. Well, we get a little bit of a run up in the underlying of silver, combine that with the potential for volatility to go higher as the silver itself goes higher, then that'll give us an opportunity to do several things. I could maybe sell a 30 call or just any call at a higher strike price and be better off than where we were going into this and have more potential upside. Perhaps I can go with a more near-term month and then get out of the upside obligation sooner. There's a lot of things with which you could do. So if silver starts to have more of a run-up, there'll definitely be more opportunity to discuss this in the strategy block. Final thing that I want to go through before my strategy block allotment time is over, I want to go through, I want to go through just a couple of moves with which we did in early May when we had the lower VIX. The first thing that I did was, I shouldn't say the first thing, but one of several things with which I did was in my XLF. We were using the September 22-20 put spread as a downside hedge. We got out of the 20 put for 16 cents. We bought to close. And the reason that we bought to close, it was a longer term option. And we got out of it because volatility was so much lower. And we viewed that as an opportunity to take advantage of lower volatility. That same put today, it's about maybe around 20 cents. And, well, you might say, oh, well, Mike, then what's the big deal over 20 cents? Well, the big deal is that XLF, although it has come down a decent amount, volatility has come up a bunch on that as well. Similar scenarios with SPY. We got out of the September 195 short put on a put spread with which we were using. And so with the lower volatility, we took advantage of that. So where yesterday, when we start going down 40 points in one day, if this is the beginning of a huge major downturn, we took advantage of the lower volatility and we bought insurance before the house was burning down. So now that the house appears to be burning down, or at least it appeared to be yesterday, who knows what it's going to do tomorrow. But if the house does burn down, we already have the fire extinguishers, and we got a really good deal on the fire extinguishers at Ace Hardware. And on top of that, we got a really good deal on the insurance from the insurance company because we had a 9 VIX. So those are some things with which we've done over the course of the last month. Nothing huge, but when you have a low VIX like that, you have the opportunity to do a lot of things that can put you in a not so bad situation when days like yesterday happen. So to sum it all up, do stuff.
I like it. A strategy block infected by the RockLobster. We still got some time. A lot of people are hitting us up with all sorts of crazy questions. So let's see if we can get to some of those with a nice Thursday episode or edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know how to hit us up. Like the man said, this is the portion of the show where we answer all of your crazy questions and respond to your comments and put up with your abuse about the RockLobster and all that other fun stuff. Speaking of abuse, so not really abuse, just this is why I don't delve into the political realm ever. I made that joke at the top of the show about this must be some sort of record for a new president getting a special counsel to investigate him. And Matt Greco was quick to point out there via Twitter, as technically they're not investigating Trump per se, but more of the allegations around the Russian allegations involved in the campaign. So you're technically correct. That is true. It was a bit of a joke. But c'est la vie. That's why I don't talk about politics on this show. People get all up in arms, and very quickly, as you can see. All right, moving on to what we asked. Well, we asked you guys last week what you thought the bottom for VIX was going to be. And you said 9. 43% of you said 9 was the bottom. Turns out you were pretty prescient because we bounced off it pretty aggressively. And, of course, this week we had that massive spike in VIX. So 9 seems like a distant memory, at least for the time being. This week we asked you, hey, still a lot of big names reporting this earnings season. Which ones are on your options watch lists this week? So we gave you 4 choices: Walmart, Alibaba, Home Depot, or Cisco. It's still a little bit of time left in the poll, but I think we have a clear winner here. We'll start with you, Mr. RockLobster. What do you think is winning our poll?
The 9, the bounce off 9.
No, that was last week. This week we're talking about Walmart, Baba, Home Depot, or Cisco. Which one is their favorite to trade? Which is on everyone's options watch list?
Oh my gosh, what a dummy I am. Baba, for sure.
Interesting.
Baba.
Uncle Mike, do you agree, sir?
I would say yes, but I'm going to go with Cisco for me personally, just out of revenge, because I have umbrage against that stock. That's a revenge trade is that's how you make real money, right?
That's your next strategy block, right? Revenge trades.
Yes.
Cisco is your white whale, sir. You'll be thankful to know they're not winning. It is Alibaba with a clear 50% of the vote right now. 25% though coming in for your white whale, Uncle Mike. So better than I thought for Cisco. Only 19% for Home Depot, and only 6% for Walmart. Walmart, big bellwether, big mover today at least, and yet no love for the old Walmarty out there. Interesting stuff. There's a little bit more time left for this poll, but I think we know how it's going to break down from here. Let's get in some other questions. So this one came in for boot camp, but unfortunately boot camp is not as frequent as this show. So I thought rather than make you wait for boot camp as I hit my microphone, we'll just answer it here for you instead. It's actually an interesting question. I don't think we've ever gotten anything like this before. It's more underlying focused. He says, hey, a big fan of your Options Bootcamp podcast. Well, thank you. Oh, this comes from Andrew McNichol, by the way. He says, I appreciate how you start at square one and then walk listeners through every element of options and options trading. Notice, Mr. RockLobster, he's a fan of our Options Bootcamp, which kicked it off, and not your ripoff version over there at Option Pit. So I'm just putting that out there, as our lawyers will follow up with you later. That's an aside for another day. Is there another podcast you recommend? Notice this is why I like to have the mute power listeners of the big hosting chair, because Andrew can't respond. Is there another podcast you recommend that does the same, but for stocks? Most of the ones I found are all about what's hot now or stock picking tips. Essentially, I'm looking for a stock trading 101 podcast. If you don't know of any such podcast, what's the best stock 101 book? Thanks. Interesting question. We don't delve into the realm of the underlying here too often. So I don't really listen to any stock type 101 podcast, nor do I really know how you'd fill a show like that for any extended period of time. Obviously with options, we have a lot of great things we can get into: the Greeks, different strategies, nuances, adjustments. As you can see from Options Bootcamp, we've got probably like 100 episodes of that show and more coming. So there's a lot you can sink your teeth into on the options side from an educational perspective. On the stock side, not as much. You got technical analysis versus fundamental analysis, PEs, all that kind of stuff. At the end of the day, is it going to go up or is it going to go down? Yes or no kind of thing. So that's probably why you don't see a lot of stock 101 type podcasts or books. Aside from like the beginners guides, or guides for dummies that they have for every type of thing, which I'm a little leery of because they kind of just assign they farm those out to freelancers and really commoditize those books. I don't think you get a lot of experts really writing those anymore. So I'm kind of leery of those. But I don't know, Uncle Mike, you deal with a lot of the retail folks out there. What would you say do you have any suggestions for a stock 101 type either show or book? You have your Go Long, obviously. I forgot that one. There we go. Go Long.
Well, with that, though, the problem is in that book, we only pick one stock the entire book, and that's XYZ stock. That's always my favorite stock because it does exactly what you want it to do. Too bad it's fictitious. So, no, I really don't have a specific stock picking thing, but a lot of times what I'll do, I like trading stocks if I do delve into the stock world that everyone knows about. I don't want to do something that no one's ever heard about. If I'm going to lose money on something, by gosh, I'm going to lose it on Cisco. But in reality, I would say a vast majority of my trades are in the indices, and I'm more of an index guy, to tell you the truth. And we do have other people on our investor policy committee that delve into the stock world, and I work with them with hedging the stocks and creating income on the stocks and things like that. But ultimately, that's kind of a separate world from where I live.
Yeah, I don't know, Mr. RockLobster, you guys do education over there, obviously, day in, day out. I know you really don't do a lot of underlying. If you were to do an underlying type 101 show or book, what would you talk about?
But mostly just waiting for opportunity. When is a stock worth buying? I mean, the best investor in the world kind of just buy stuff he thinks is, when everybody's panicking, just follow what Warren Buffett does. He buys stocks when the market's falling apart. He makes big investments, and he's patient. He doesn't, he's not looking at the latest trend or the latest fad or whatever. And he's just, so that's what I would say is, when is buying a stock really an opportunity? That's what I try to do. I clearly don't do it as well as he does, but that's what I'm looking to do when I'm buying stocks. So, is it really an opportunity, or, are you just chasing the next thing? So you could always read Benjamin Graham's book on investing about just, buying cheap companies, and that might help you with, valuations. And when the going gets rough in the equity market, you think, is this really an opportunity or is this a panic? That might give you a shot.
Yeah, the old classics are still good, like the old Peter Lynch, sit in the parking lot of Walmart and see if they have a lot of business kind of thing. That doesn't really go out of style. Maybe part of the retailers going away these days. But yeah, that's an interesting question. We don't really delve into Stock 101, nor would, if I did a show like that, how I would fill, 50 or 100 episodes. It'd be kind of challenging. Good question, though. I don't know. Maybe you guys out there in the listening audience have some suggestions for our buddy over here. He's got one. Here's actually one that came in for this show, so we'll give him some love as well. This EJH4Izu wants to know, I have a question for the option block. If I buy or sell a vertical on SPX, or he puts in parentheses, or any equity stock for that matter, and I hold it until expiration, and lots of caveats here, and SPX settles between the strikes, what happens? For example, let's say I sell a 23.95, 2400 vertical in the SPX, and SPX settles at 23.97. Well, he gave us a lot of conditions here. Mr. RockLobster, he talked about he wants it on an index, but also on the equities, and then he wants it in between the strikes. It's an interesting scenario because what he outlines actually are two very different scenarios. Obviously, equities are one thing. They mostly expire to stock. Indexes, though, are mostly cash settled. So maybe Mr. RockLobster, why don't you walk him through the scenario of the index like he's asking, and then we can get into how it differs on the equity option side of the fence.
I'm sorry, Mark. I'm looking at the question. I don't quite understand it, and I don't know why I'm being so obtuse about why I don't get it. I'm being kind of a dope, but I don't understand quite is he asking the difference between an index versus an equity when he puts on a strategy?
I think he basically wants to know if you sell or buy a vertical and the underlying goes out in the middle, what happens? But obviously it differs. He throws in equities as well, so it's going to differ if it's an index which is cash settled versus an equity which expires to the underlying. So maybe you can pick your poison on the underlying if that throws you off. Just say XYZ and just walk them through an example there. What happens when it goes out between the strikes?
Right. So anything that happens, it depends what you put on the trade for. So if it's a cash settled index, it just settles for the value of whatever is left over for the side you have. So if you have an in the money short, it's going to settle for that in the money value. So that is what's going to govern it. If you have an equity, it's totally different. So here, I guess the example is it settles at $23.97. The spread's worth $2. If it's an equity, you could be your long call would in this case would be exercised. If you're short the 23.95 it would be assigned. Obviously, that's not going to happen in the SPX. It just goes to cash. But if it's in an equity, you would be, you would actually have to come up with the stock and deliver it short term, which probably your clearing firm is going to have a problem with. So, anyway, what I would recommend is, settlement for this is one thing about cash versus underlying settlement. Cash settlement it's just the cash. You don't have to deal with anything. There's nothing really funky or crazy that's going to happen. That's why they're so popular. One thing you have to see, though, is because of the SPX, there could be an AM or PM settlement. That could be something. So basically, you let's say you sold a call spread, and on Thursday it looks like it's going out worthless. But then, because in the SPX, if you do a serial, if you trade a serial spread, that's a monthly spread, and the next day you gap up, you actually would, gaps up to 23.97. Let's say something you thought that was worthless, it's going to cost you $200. And an equity, you could be assigned at any time on something that's in the money. So you have to be careful. Now, there's rules for assignment, like what's likely to be assigned and things like that. But you could even be assigned something that actually goes out worthless. It's certainly possible. So at Option Pit, we just recommend people close positions. If you're short something, close it. That way you always know what it's going to be worth. That's the that's the best advice I can give people. People say, no, let it go out worthless. But the one time you let it go and it blows up in your face, you're going to be an unhappy camper.
Yeah, there's a reason why we said on this show and most shows on our network many times, you probably heard us, you're probably bored of hearing us saying it, that, just close it out before expiration. You know exactly. In this example you gave us, the spread went out for $2 of worth. You don't say what you sold it for in your hypothetical example. But if you sold it for more, you buy it back, you're making money. If you sold it for less, you're losing money. Obviously, the equities are a little bit different thing. We don't have time to get into all of that. That's good. You gave us a good, I think it gave me, anyway, a good idea for maybe another upcoming boot camp show about all this kind of stuff. What happens when the underlying settles out between the strikes? I like that. So maybe we'll explore that in more depth on an upcoming episode of Options Bootcamp. Good questions all. We got to keep rolling, though. It's time for our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let's do a quick check-in back on our friend Gap. They were coming out after the bell. They were trading. They closed right around 23.19. They were pricing in about $1.85 or about 8%. And right now, looking well shy of that, trading 23.87, only up a little bit shy of 3%. So not looking too good if you're out there buying all the Gap vol out there. But that said, let's turn our attention to what else is coming out for the rest of this week into the old weekend. We already had a big bomb drop this week, a figurative one. Maybe there's a literal one coming. Who knows? Let's start with you, Uncle Mike. What are you watching for the rest of this week, sir?
Well, I just want to see how we react tomorrow. Tomorrow's the key day because it's right before a weekend. Are we going to have more fear in the market of people not wanting to mess with all the uncertainty over the weekend? Or are we going to see people saying, well, this is a great buying opportunity and making the market go higher? Tomorrow's a key day. I am glued to the tape tomorrow, and I'm excited about it.
As opposed to the regular days when you're also glued to the tape, but just less interested.
Pretty much.
just clarify.
BBI will be high tomorrow.
Just be high, BBI. I like it. All right, and take us home, Mr. RockLobster. What are you watching for the rest of this week into the weekend, sir? And your news bombs coming?
Yeah. Let's see if the trend for volatility continues. Also, looking at this thing going on in Brazil, not a small sell-off there. Wake up and your major market index is down limit. So, I don't know. Is that more things to come in the U.S.? Does the president get himself into trouble, or does he not get himself into trouble? Which it seems like he somehow gets himself into more trouble than not. Just watching it all happen. So, if more bombs drop, if the Mueller comes up with something, who knows? It's a drama that is not over.
Clearly, that is not over. But you know what is over? this show, unfortunately, or perhaps fortunately, depending on your point of view, if you're done with the old RockLobster. But before we go, as always, check back in with my cohorts, my partners in crime. See what they have cooking. Let's start in the realm of the pit. Mr. RockLobster, I know you guys always have a nice masterclass on hand. So what do you have in store for us over there at Option Pit these days?
The masterclass is starting next week, and now that we have some premium, it will be an interesting look on what makes a good volatility sale, managing the positions. We try to break some myths about credit spreads and junk like that, but mostly just, how to sell volatility, manage the position, and deal with the result.
Check it out, optionpit.com, where you too can take the masterclass. All right. And last but not least, Uncle Mike, what is cooking in the land of RCM Wealth Advisors?
I'm reaching out to all one-lot traders out there. I was doing an illustration recently with our investor policy committee on doing one lot on certain stocks and how it might be frustrating to some and how they have to roll an option on a covered call, let's say, and they have to pay a ticket charge for doing that. Well, that doesn't exist at RCM. You pay 35 cents a contract with no ticket charge. And we trade through TD Ameritrade Institutional, Interactive Brokers, as well as Money Block, and some of the rates are even cheaper at other places that we work with besides the 35-cent one that I mentioned. So if you are looking to do such a thing, of course, there's a couple fees involved, but most of the time, it works out a lot better for people that do one-lot trading. So give me a call if that's something with which you're interested in, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
There you go. You know how to hit him up, and go pick up his book if you haven't already. Less than the price of a latte at your local barista store. And you, too, can read Going Long with Uncle Mike Tusaw. And on behalf of Uncle Mike and the RockLobster, and indeed myself, I want to thank all of you out there in the listening audience, all of you who joined us live. We love you guys. Well, if you ever listen after the fact, we love you guys too. Keep those questions coming. We do love to hear from you guys. You guys give us all sorts of great material to talk about, so we thank you for that. And we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.